Welcome to the Treasury Update Podcast, presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in.
Welcome to the Treasury Update Podcast. I'm Paul Galloway, Senior Advisor at Strategic Treasurer. I'm joined today by Craig Jeffery, Founder and Managing Partner of the firm. And we are here to talk about the 2022 Analyst Report we just put up. You can find a copy of that on our website at strategictreasurer.com and also in the show notes.
And just so people know, it's extremely current. There's a digitally fresh copy. There are also some physical copies. Most of those were handed out at the Association of Financial Professionals annual conference this past year in Philadelphia just a few weeks ago.
Yeah, I think we got really good response from folks on the analyst report. We had hard copies and also QR codes for soft copies, and it was well received. Craig, I'd like to talk about Treasury Management Systems, or TMS systems today. We have a section in the report dedicated to Treasury Management Systems. And I think one of the things that would be good to cover at the front end would be, what are some of the recent trends in the TMS arena? Being at the AFP recently, they were out there showcasing some of their more recent technology and things that they're doing, gearing up for future plans as well. What are you seeing out there? And, how did we present that in our analyst report?
Yeah, so in the analyst report, we have multiple sections. So for those who are listening, there's going to be a few other podcasts on this. We'll talk about Treasury Management Systems today, a core area of Treasury. There'll also be a podcast. Hopefully, Paul and I can talk about Treasury aggregators, which includes the payment hub space. And we'll look at supply chain finance and the cash conversion cycle, a number of solutions that fit into that. So it's a pretty comprehensive technology analyst report. There's also a full section on Treasury Tech Landscape, the category that we've named Enterprise Liquidity Management, and a number of other pieces there for those who are interested in looking at the full scope. But Paul, to your question about some of the recent trends in the TMS area, life has been quite good for treasury management system providers for over 5 years now, maybe over 8 years. It's been a very significant and growing area. So there's increased adoption. What we saw a decade ago was new providers were all SaaS. Actually, almost 2 decades ago, most of the new systems were application service providers moving to SaaS, and that's been dominated in that space for quite some time. There's been this trend too, an ongoing trend, maybe an acceleration on a already accelerating trend of replacing older legacy systems. So moving to the new tech has been happening. So replacing older, either homegrown systems or tech that might be client server, maybe some technology is not updated as frequently. So those are some of the recent trends in that space. So popular, above trend adoption and use, and replacement. So those are some of the broader trends that we see. There's certainly a lot of trends in the technology space as well.
Good points. So when we think about the adoption of this technology, which certainly has been ramping up, we're seeing more and more organizations committing dollars towards treasury management systems and other technology to help them gain more visibility, do their jobs more efficiently, manage risk better, have those controls in place, generate reports, consume data for analysis and more strategic views of what their business is doing from a cash perspective. What do you see going forward? What's the trend, or what is the future for treasury management systems? And is it more of the same with more bells and whistles, or are we going to see a complete overhaul of how those systems are deployed and how they change over a period of time?
I think you might have been trying to break my brain with that question. There's a whole bunch of, you listed like 10 things, and then you talked about kind of the macroeconomic elements that factor into what drives the use of tech and tech. So I'll try to, no, it's a really good question, and it's very comprehensive. I'll break down my response this way. So why are TMSs, Treasury Management Systems, becoming so popular? And if you hear me say TMS or Paul and I saying TMRS, Treasury Risk Management Systems, Treasury Management Systems or Treasury Risk Management Systems, those are the category of systems that helps Treasury manage liquidity, cash flow, risk on a number of fronts like FX risk or interest rate risk, support accounting controls, payment security. So what's pushing this big drive? Well, there's a lot of expectations placed on Treasury groups. They can't meet the needs of their executive leadership, the requests that their executive leadership ask of them, and I'll say demands of the new employees in Treasury and Finance. And I'll break that down in a couple of pieces. So when you see what is executive management and the board expect from Treasury, well, they want organizations to handle new risks more proactively, be able to see what the risks are, threats are, and have plans either ready to go or in place that address these early on, not reactively, but much more proactively. So the expectations are higher. And this comes in an environment of, we've seen inflation escalating, sitting at a much higher level, above 7-8% in the U.S., higher in other areas, a little more moderated in others. But escalating inflation puts pressure on those. Well, there's also rising interest rates. And I know this is not a discussion about that at length, but central banks have been pushing up rates. The cost to borrow has been higher. So this creates other factors. And then there's broader economic issues. Are we in a global recession? Are we in a regional recession? Is that going to happen throughout 2023? A number of those issues weigh in on the business. Plus, there's all the business issues about the normal competitive cycle, access to certain goods or services to support the financial supply chain as well as the business supply chain. So these create risk and challenges for companies, and the expectation is that Treasury will be able to respond more rapidly. That's one aspect that's driving the need and the increased adoption of Treasury management systems. Despite some of these headwinds economically, companies are not slowing down their investment there. And I think that's a good piece of information to have concerning your decision to use this type of tech. Why are people investing in it during times that may be uncertain? Is there's significant value to it? To your second point about technology, what's happening, what's emerging on that front, and what do we expect over time? Well, one area that's been in place for a while, and you know this really well, is business intelligence tools and dashboarding. The depth on that has grown. The capabilities and the depth has grown quite significantly. I mean, when you think about dashboarding a while back, let's say 5 or 10 years ago, dashboards really weren't much. They were like reports. But now they're much more, they're like dashboards or cockpits or things that you can see, adapt to. As you learn, you can continue to drill in, make decisions, or learn as you go. That's one, Paul. The other two I'll just mention and give you a chance to jump into. A couple other trends: the use of AI and machine learning, the use of APIs, the idea of cloud native, or this decrease in the size of system elements and components that allow the development cycle to change. And I'll pause there in case you want me to dive into any of those in particular. Or...
Yeah, Craig, I think your closing comments there in this are really good aspects to consider. Before I jump into that, just thinking about your comment on reporting, one of the things that I see for Treasury departments having a dashboard that is more interactive, as you put it, it's one of those things you talk about. There's two ways you can go. You can be reactive or proactive, and historically, the way Treasury worked, it was more reactive. You saw something, you did something, and it was really kind of blocking and tackling or functional. And they're taking steps forward with this kind of technology and dashboard that can inform them to make more proactive decisions. They can see what's going on, not just today, but tomorrow, the next week, the week after that, and they can start positioning things and making decisions around how they manage their cash and their liquidity more effectively. So it becomes less reactive and more proactive. And, I think that's very encouraging that the technology is allowing them to do that. So you brought up APIs, and APIs are something that's, a hot topic. Lots of people at AFP were talking about APIs, and there's all kinds of variations between what the banks are doing, what the TMS, TRMS providers are doing. Everybody's out there focused on APIs, and so are the clients, the customers. They're focused on that as well. So can you provide some background on the APIs and what you expect to happen as market demands for this connection between systems grows? What does that look like, and where is it going?
Sure. APIs, or application programming interfaces, that term has been around for quite some time, though its capabilities, the capabilities of APIs, have differed significantly over time. Just like you may have had a portable phone. Well, that looked very different 30 years ago, 20 years ago, 10 years ago, and today. The same thing is true with APIs. And I guess one way to think about how that's changing is if we think about three different ways of connecting, let's say just to get information. One is I log into a portal, I punch in my codes, I see what goes on. And then maybe I have to rekey that information into a spreadsheet or into a system. The second might be I want prior day information, transaction information. And so I have the bank create a file that gets pushed to me through some type of file transfer process. And then that has to be loaded into a system. And there's a creation of a file, the establishing of a connection, the passing of the file, the loading it, many, many steps to make that happen. And there's time that's involved in that. And it's been a very effective method of communicating. An API there's no file. There's the connection and the transmission of the information between systems into the system that you're using. Let's say you want visibility to all your balance information. Well, that takes out a lot of those steps. There is no file, just like Neo in the Matrix, that 1999 movie, right? It's like there is no spoon. There is no file. There's the information transfers very quickly. Now, not everybody needs instant or super fast, but nobody wants slower. But the promise of the APIs is that and what we certainly see is that as you work out the initial kinks, and we're past that stage with many banks, we're still doing better in that area. It just allows for faster information, less touch points. So we're on the steep growth curve. It's providing advantages. So should someone rip out an existing host-to-host connection to put in APIs? Probably not, unless you need something really, really timely. There's a lot of strong features of what went before. But when you think about what do I put in from a new perspective, you're going to lean towards API. So this is really how people have open treasury. You've heard of open banking. This is, I want to be able to consume information or have views in the system or on the piece of glass that's most important to me. And so this allows you to get that data from different areas in an easier to consume manner. Just like on your phone, your rideshare app, it uses a map. There's APIs to drive that. Your payment methodology is driven by APIs. It allows you to pull these together, view, act, or analyze on the pane of glass that you're most interested in doing that. And so the adoption rates are going up really rapidly. They're far higher than people expected them to be. Like people that expected to adopt them over the next couple of years oftentimes adopt them within a year. So this is one of the few areas where expectations were lower than the actual adoption. Now, there's a couple areas that slow it down. Not all the banks are on the road to APIs, and not all the banks are at the same level of effort and energy about building that out. So it's a long transition. It's not a 1 or 2 year transition. I think we need to think about 5 to 10 years for systems to get replaced or features to be added. Certainly the largest banks, the $1 trillion banks, the super regional banks are making good progress. It's quite a bit spottier up below that level.
Yeah, Craig, thanks. Those are great comments. APIs are just going to become more and more familiar, I think, across the board as we move forward in time, as you pointed out. Companies are expecting this is the way everything's going to move. And as you pointed out, also adoption trends have been faster paced. That's great to see. I think that's good across the board, but it's more of this marathon versus a sprint kind of approach, just because they are complicated. It's not that they're, hey, I can just write this code and make this connection and boom, it's done. It takes significant effort. So it's not an overnight, one day kind of deal.
Maybe it's not a sprint, but maybe it's not a marathon either. Maybe it's more of a short distance run compared to the past. We're seeing the adoption of APIs across all of the technology that we use. For example, from provisioning data lakes and blobs, very quick to set up, from factoring in time recording systems so that you can access a whole range of analytics, to connecting to your banks for information or for making payments. So when they get set up, it's quick, but you need them with all your partners. So it's a consistent spread in one direction. Maybe it's middle distance. I don't know, somewhere along there.
Maybe it's a 10K or something, half marathon. Yeah. Certainly not a 100-meter dash. So let's focus on artificial intelligence and machine learning, which, these technologies are becoming more and more prevalent. You're seeing TMS providers out there focusing on these two areas, that they're part of their analytics tools, forecasting, data management, being able to report. When you think about AI and ML, where it is today and the importance of it to Treasury from an analytics perspective, what are the key factors that Treasury departments are focused on, and what does that look like going forward over, let's say, the next 5 years?
Artificial intelligence, machine learning, the idea of, can the system learn to think like humans do? Component of that, machine learning, the ability to detect or determine patterns of things that have happened in a guided or an unguided manner. This is an area of significant growth. While APIs are really important on the connectivity side, that's going to be a big trend. AI and machine learning help as well in a number of areas. So you asked where will it impact? Where does pattern detection help? Where does understanding trends? Everyone's thoughts may go to forecasting, and we're seeing some decent progress with some of the TMS providers in making a forecast that works using some tools. This might be like a self-driving car from some time in the past. It doesn't handle every situation, so you do have to keep your eyes open and your hands on the wheels, but it's going to be quite helpful in aiding what that process is. They get better and better, and those who have maybe simpler cash flows, more predictable cash flows, it does particularly well. There's some other areas where there's great variability, or there's other items where the patterns aren't as relevant, where the tech has to catch up and do more to get on par with what the humans can do. This is a big area. Forecasting is so important. Nobody has time to do it. And the advancements here are pretty exciting. You can be a pessimist about this, or you can be an optimist. I'm leaning towards the optimist side. I think there's been really, really good progress over the last couple of years. There's quite a bit to go, but there's good progress there. Patterns aren't only in forecasting. You can think about patterns for quality control. You can do setup and have patterns detect what's normal behavior, and so you can use that to catch criminals or potentially fraudulent items or errors. So this idea of quality control can catch errors, let's say in a payment process, ahead of time, or alert you to this falls outside the norm. Or it can help catch fraud, potential fraud or real fraud, to say this falls outside the norm. We see that being applied within TMS systems, within treasury management systems, in a number of areas, especially those that are focused on more payment hub type functionality. So this ability to detect fraud or anomalous behavior is really, really important, because almost all fraud does follow some type of non-standard anomalous pattern. Those are a couple areas that I think of and that we're seeing development. I expect a massive amount of development in the next 3 to 10 years here, and probably beyond that, but that's as much as I can imagine right now.
Well, that sounds like really promising news for Treasury departments that are considering this kind of technology or have this technology in place, that they'll be able to, down the road here, get more and more out of AI and ML and help them with more than just forecasting, as you pointed out. I think that's a great step forward, especially around the fraud protection piece. And we know fraudsters are becoming more and more savvy, and they're finding more and more creative ways to protect an organization's cash. Anything that can help them detect these anomalous activities, the things that are out of the ordinary or that don't seem right, have something that is out of the ordinary. I think that's just really beneficial to treasury departments. As a treasurer, last thing you want to have happen is somebody comes in to the kingdom and is able to pilfer the gold. That's the one thing you don't want. It's what keeps a treasurer up at night. And that was the one thing I always worried about when I was, in those kinds of roles. Is somebody going to take the cash? Being able to have some sleep insurance around, not worrying about, you still worry about it. It's part of the risk management. Having these tools available to manage and mitigate that risk the best you can. That's just great news for treasurers. Well, Craig, this has really been enlightening. I really appreciate your time today talking about TMS. Looking forward to the other areas we have highlighted for the future Treasury Update podcast. We'll be talking about payment hubs and cash conversion cycle and what that means for supply chain financing. Appreciate the time again. Look forward to the next one.
You've reached the end of another episode of the Treasury Update Podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.